Good morning, Steve Free in Chicago with the morning grain comments. Well, happy Friday. And overnight, we've got beans up a penny, oil finally gaining a little bit on the meal market. Corn's up 3 cents, wheat's up about 8 cents. Stock market looks to be opening lower. Dollar's higher, crude's higher. Crude market is putting a little premium in after Russia announced they were going to lower production, and OPEC was not going to increase production to offset the lower Russia production. We also saw overnight increased bombing of Ukraine by Russia, and Ukraine continues to be concerned about an increased offensive by the Russians in the near term. And so that might be adding a little bit of premium to the corn and wheat market. Soybean meal yesterday rallied back up close to the $500 level. There continues to be concern about the lower Argentina crop. The weather pattern has turned drier for both the Europe and the American model. And so some people, bears, feel that there's enough beans in Brazil to offset the lower Argentina supply, but that Argentina will need to buy beans from Brazil. Also, the Argentine farmer is not selling beans, whereas the Brazilian farmer is. And the conditions in Brazil are mostly favorable for a record crop. We also note that historically, in this type of situation with the lower Argentina supply, the nearby March-May soybean meal spread continues to gain because of short covering from your normal short positions if Argentina had a normal crop. Vegetable oil markets lost about 2 cents in the last week, mostly because of spreading of long meal short oil, but also some talk that palm oil stocks are increasing. Export demand is declining, which is weighing on palm oil prices and which is weighing on vegetable oil prices and soybean oil. The corn market, I think yesterday we saw some selling. I think that after the export sales numbers, even though they were better than expected, the pace is still behind to get the USDA numbers. So some people think USDA eventually is going to have to lower U.S. corn export numbers and then raise the carryout, which is offering some resistance to the marketplace. Support comes from the drier Argentina weather, uncertainty about Ukraine exports, and the fact that Brazil is out of the corn export market until July. Southern Plains remains dry. U.S. export demand yesterday for wheat was very disappointing. The fact that Russia did all the Algerian tender and that hard red winter wheat prices are $70 to $80 above Russian prices offered some resistance yesterday to the wheat market. Latif futures was also lower on that Russian sale to Algeria. The United States Trade Representative asked Mexico to respond to their question by February 14th as to what is the science behind their GMO corn ban decree. So again, market's hoping that Mexico can find a way to buy U.S. GMO corn. So all in all, I think we're going to continue to see a choppy trade. Bean market, corn market supported by Argentina weather, whereas resistance overhead on lower demand for U.S. exports. And then the wheat market is basically a weather market with Russian prices lower than U.S. and offering resistance to the marketplace.